Welcome to the daily stock review of Oracle. The goal of this channel is to uncover the world's best stocks that have 100x potential. I'm an investor on the journey with 2,500 hours in over the last 7 years, and I'm just sharing lessons along the way. Today we're going to go over just the stock analysis. So here's my investing process. I'll tell you about where I found this stock or came across it, and then we'll be performing a 5-minute check to see if this business is worth looking at further. I learned from these guys. They did pretty well for themselves over just a little while, and by following their success and the breadcrumbs they've left, we should be able to emulate some of that success. All right, well, let's jump straight into it. I want to look for their annual report and just the latest one. Now, as I'm looking for that, I'll explain how I came across it. Now, I do like YouTube. There's a lot of videos around talking about the AI, how it's set up, and various links and interdependencies between different companies, different stocks, and different, industries and things like that. And so, 10K, QK, Q4. Just see if we got, oh yeah, 31st of May 2026. Nice. All right, so yeah, just with the interdependencies, Oracle is involved in a lot of different things, but it's also been involved in the build out of data centers, specifically for AI. And so they got a bit of exposure to it. And what that's meant is a lot of people are freaking out, man. So the stock price has crashed down and then back down. So there's a lot of hype, as you can see by this general trend up, and then it keeps coming down. So there's a little bit more fear around the stock. So today, I know that this business probably got a good indication that it's not going to be worth looking at, but it's going to provide a useful look at what are the things to watch out for, and can we actually see those in the financial statements. So let's jump straight into them. Blah blah blah, accounting sign off, thank you guys, and balance sheet. Now I want to see the income statement. Comprehensive income, here we go. Went past it. So consolidated statement of operations, which is also known as the income statement, breaks down what money these guys are making, and just a quick look at that. So revenues, they've got a couple of sources for that revenue: cloud services, software, hardware, and other services, and total revenues. So from 24 to 25 to 26, 52, 57, and 67. And this is in millions, so that's 52 billion, 57 billion, 67 billion. So I can see that total revenue has been steadily increasing. Now, where has it been increasing? That's remained fairly flat. So is that. So has software, but it's cloud services has been increasing. And that's where the growth of the company has been. So what's that? Over a 2-year period, so 24 to 26, from 20 to 33, so 50% increase. So if I was looking at this business further, I'd want to read in specifically what are what is a good explanation for the cloud services. But let's keep going. So operating expenses, cloud software has gone up. So it's gone from this over that 2-year. It hasn't exactly, pretty much doubled. Hardware, other things like that. What other increases? We've got some research and development that we would expect to increase a bit year on year with the growth in that revenue, that is. amortization, restructuring. What about at the end of the day? So net income. So showing that net income has increased. It hasn't exactly doubled, but it's definitely gone up from 10 up to 17. And so a lot of people price it based on what the revenue growth of the company is, but there's a lot of different things that can happen and come out of that number at the end of the day. Now, let's go back up and we'll have a quick look at the balance sheet, because this is where a lot of the fear is. These guys overexposed? Do they have a lot of liabilities compared to their assets in term or their income? And are they going to be able to actually pay, how it's kind of structured? So assets, cash and cash equivalents, so 10 up to 31. So looks like they've increased their financial position. Let's have a look at how they did that across the year. Marketable securities, trade receivables, property, plant and equipment, 43 up to 99. So with all this build out, we would expect it to dramatically increase. We'll probably see that in the cash flow statement, see the money being invested in there as well. Operating lease, right of use. So total assets, 168 up to 261. So a pretty significant increase. So current liabilities, so this is everything that needs to be paid pretty much within the next 12 months. 32 up to 41. Main items here is accounts payable, and it's pretty reasonable. Notes payable and other borrowings. So we've got 85 up to 122. Notes payable and other borrowings, non-current income, operating lease liabilities, other non-current liabilities. All right. And all right, interesting. So Oracle Corporation, stockholders' equity, accumulated deficit. Interesting. So they've gone from accumulated deficit and then it's reduced. Let's have a look at the cash flow statement to have a bit more of an idea about what's going on. So this can help pick out where the money's actually being spent, because in the income statement and the balance sheet, it can be a bit difficult about, you can see the figures going up and going down, but you can't actually see where it's flowing from and to. So net income comes out, that's from the income statement, and we can see these non-cash charges going back in. We see stock-based compensation. That's pretty significant. So, effectively 4 billion being spent on it each year. So that's usually a sign that, different areas, etc. But we don't want to see that much kind of spending going on. It's not a giant red flag, but it's one to just keep an eye out for. Changes in operating assets, liabilities. Net cash provided by operating activities. All right, so cash is increasing. Capital expenditures. So over the last 3 years, it's gone from 6.8 to 21 to 55. So a lot of their cash that the business has been generating is getting plowed straight into here. Now, obviously the money that they're investing here, 55, is bigger than the cash provided by operating activities. So where has that extra money come from? So proceeds from issuances of common stock, it's negligible. We've got this one. Proceeds from issuances of senior notes, term loan credit agreements, and other borrowings. All right. So they have tried to shore themselves up financially and be able to invest this money and build out by borrowing some debt. And so it will now be very important, if looking at this business further, to have a look at how these senior notes and agreements are structured. Does it look like this business, if this all went to poo and the really having a good understanding of how these contracts between Oracle and where it's providing these services to is structured? Is Oracle guaranteed that income no matter what? Kind of like demurrage. So if you buy a ship to transport your products over to just to transport it in general, that boat, if it arrives and your products aren't ready or it just waits, it's either take or pay. So it'd be interesting to have a look at how these contracts are set up, and does it leave Oracle overexposed that if OpenAI or other businesses that it's involved in, if they decide to pull the pin on them, are these guys exposed? They're not going to get their income from all these capital expenses that they've built and then are now effectively worthless. What does that mean for them being able to pay for these debts? So that's very significant. The cash flows that it's generating, though, is pretty substantial. And so it makes it an interesting investment to have a look at. Is it something that I'd want to have a look in? Like, potentially. But is it a business that's going to go from where it is now and up 100x? Probably not, but it might end up being a bit of a value play with all this negativity around it. The price of the stock is coming down. And it really is going to come down to, I guess, that pessimism, the real negativity around it, and the rationale that if those contracts do have adequate protection in there for Oracle, that they'll be able to pay these debts off without going bankrupt. Because that's the sentiment that I'm getting from the marketplace in looking at the share price, looking at some of the articles that are being written about it and things like that. So it'll be very, very important that the rationale behind AI, people wanting to pay for AI services, AI needing that much computing power and needing these data centers built out, and then that per unit cost for either the tokens and things like that. If once that supply and demand dynamic settles down, is it actually going to be at the stage where these companies that have invested all this infrastructure can actually still make a profit from it long term? So they might have, for instance, as an example, it might be $1 for this much space and this much computing power. But because they've built all these things out, supply and demand dynamics might push that down and say they can only get 10 cents for this much. So now their entire data centers that they've built can only get worth a lot less. And we know that over time, the efficiencies of building these equipment and hardware is continually improving. So over time, new entrants into that marketplace that are providing data centers will have a more elegant and simpler solution at a lower cost, as well as all this initial infrastructure, I guess, is built out. It's quite expensive. All right, that's my take on Oracle. Is it worth a look? Yeah, if you probably haven't looked at it in terms of a value play, to see if you can is it worth it? And having a look at obviously what that means for your own portfolio. If you've got a whole bunch of AI stocks and it's overweighted towards that, sure, in the rosy view that everything goes right, then it'll go right for you. Knowing that right now a lot of these stocks are still priced for perfection and a future that hasn't yet come to pass. Just like the dot-com boom, there was a bust for that as well, when expectations didn't meet reality. All right. Now, if you like this video or you've got any other questions, concerns, if you're actually really looking into Oracle, feel free to drop a couple of reasons why in the comments below. You know, what's your rationale behind it, and if you've got any other stocks that you'd like to have a look at, feel free to drop them below and I'll try and review them in upcoming videos. If you like this and you want to see other reviews get done, feel free to subscribe. And if you liked this, then YouTube reckons you'll like this next video. Cheers.